Hello everyone, this is the pre-market report video for today, May 22nd in the Indian stock market in terms of Nifty and Bank Nifty. Today is one of those days, both global and local, where market gets very confused. Because both globally and locally, we got positive info as well as negative info. First, let's see the negative ones. Though all three major index in US market opened positive, but at the end of the day, all closed negative due to the debt ceiling issue. In US Friday afternoon, Republican Party people staged the walkout from White House stating that the negotiation is not acceptable. And this killed the Wednesday and Thursday optimism and made the US market to close negative. Dow Jones lost 0.33%, S&P 500 down marginally 0.14% and Nasdaq too down by 0.24%, whereas VIX increased by 5% and moved near 17. So this is the negative. On Friday, market just reacted to sudden walkout. And for fact, in the history of US, they never default their bonds and Republicans too know this. So not raising the debt ceiling is not the option since the consequence of that will be an unimaginable catastrophic. This will completely undermine the dollar's dominance and people around the world other than US will stop investing in US bond. Basically, this will catapult the Chinese dominance in the world. As I said, if US government didn't pay the interest rate means, then outside world people will say no for US debt. To be honest, this already started to undermine the dollar's ability. Anyway, I believe 90% Congress will increase the debt ceiling and it was known to all investors, but that 10% human stupidity is kind of making the market very nervous. Now, after the G7 and Quad meeting, US President Biden back to US to resume their debt ceiling negotiations. And today, there is a schedule for meeting in White House. So, can we take this as positive? Only time has to answer. And actually, there is another huge positive on Friday in US. Fed chairman interview, which is gone unnoticed, but every international news websites did discuss about it in the weekend. Anyway, in his interview, he mentioned that and he thinks that the rate hike is high enough to contain the inflation. In addition, he mentioned that this banking crisis now reduced or tightened the credit cycle, which also started to help to contain the inflation. This is really a good information since he is giving the straight signal that he is willing to pause the interest rate hike. This is huge positive which was gone unnoticed on Friday. For example, please have a look at this Fed monitoring tool. As we all know and we discussed multiple times in this channel that this tool will give the future probability of interest rate hike. Here, look at this previous day probability. On Thursday, near 60% Fed will pause interest rate hike in the upcoming FOMC meeting. That increased to over 80% that they will pause the interest rate hike on Friday and weekend. After the Fed chairman's interview. This is very, very positive, but as I said, it was overshadowed by the Republican Party people sudden walkout on Friday. Anyway, moving on, oil didn't change much. WTI crude oil on Saturday closed near $71.5 per barrel and Brent crude oil closed near $75.5 per barrel. Coming to Indian areas, IT stocks closed positive and it's in line with Indian market, whereas despite its positive close in Indian market, both banks closed negative of 0.3%. In terms of US Nifty, on Saturday morning, it closed at near 18,210, which is kind of indicating flat to negative 20-30 points gap down. However, the negativity on both SX Nifty and Banks ADR might be due to the announcement of RBI's 2,000 rupees withdrawal from circulation from today onwards. Here I am guessing most of you might know already about this, and again during the weekend there are lots and lots of news websites, both local and international, did their analysis and shared their opinion about this withdrawal. Anyway, collectively, this is what most of them mentioned, that this is not same as 2016 demonetization, since at that time over 86% of currency circulation was withdrawn, whereas now it's only near 10%. In addition, at that time, e-commerce was not that penetrated in whole India, whereas now more people got digital access. Third, this will bring some more money into the banking sector and to some extent to the stock market as well. So there is a chance that banks area reaction and excess Nifty was the false indication. So this is what happened in the global market. Now let's move to the India related info. First, on Friday, after 16 consecutive sessions of buying, finally FII turns net sellers. The net sold for marginal 110 crore rupees, whereas DIA net bought for approximately 1070 crore rupees. And the second info I like to highlight is about RBI's macro release in the aftermarket hours. India's foreign reserve increased for the third consecutive week and reached near 600 billion US dollars. This is the highest Indian forex value in the last 1 year. In addition, on the bi-weekly report, banks' credit growth increased by over 15% and the deposit increased by over 10%. Both this news is very positive for banking sector since more deposit and credit growth, more the banks to grow. Finally, Glen Pharma, Delivery, NTPC, Zomato and Powergrid released their quarterly results. Here, only Zomato narrowed their loss to just 187 crore rupees compared to 360 crore rupees a year ago. All others posted not so good results. For example, Glen Pharma's profit declined by 12%, Delivery's loss increased to 160 crore rupees compared to just 120 crore rupees loss a year ago, whereas in case of NTPC, its profit just increased by 1% and Powergrid profit just by 4%. Both year-on-year basis, basically not so good growth. As a summary, US market closed negative, but we can't take it as it is since it's like positive for debt ceiling talk resume and interest rate pause by Powell, whereas there is a negative that still we got this debt ceiling uncertainty. So basically, global momentum has to balance it out to define the direction. Here, my opinion is positive, but just a disclaimer, I can be wrong, it's just my opinion, since market always hate uncertainty. Just for info, at present, all the US future market opened and trading marginally negative, which is not good. Similarly, both Banks ADR and Exchange Nifty was indicating negative for the moment, but I think that can be positive as well. Let's see. About the things to look out, Shree Cement, BPCL, Aditya Birla Fashion, India Bulls Housing and Sun Pharma Advanced Research are some of the major Indian companies' earnings results are scheduled to release today. In terms of macro, first, before the market opening, China's interest rate decision is due. At present, the expectation is to keep the interest rate same as 3.65%, but by any chance, if they reduced or increased, there might be the consequence. Then, during our market hours, today there is a meeting between RBI governor and all the Indian bank directors. It's about regulation and ethics in banks. Again, we don't need to worry too much. But if new introduction of regulation tightening can hurt the market. And in the aftermarket hours, Europe's consumer confidence data is due. Coming to technical, if we combine the last 2 days, Nifty forms the bullish harami pattern. I mean a small increase in price signified by a green candle that was contained within the downward price movement signified by day before previous red candle. Simply, it's a bullish trend reversal in the bear trend. Similarly, if we take just 1 day, it forms a bullish hammer candle. I mean, market was opened higher but pushed down by the sellers, but the buyers come back more strongly than that of the sellers. This results the formation of small positive green candle with a long lower shadow. This is also a trend reversal. Now, this is kind of giving some hope about upside bounce. This bullish harami and hammer pattern could pull the Nifty towards the crucial resistance band 18,400 to 18,500 again. Let's see. On the downside, if market falls below 18,050, then it might slide to 17,900. In terms of moving average in daily chart, at present Nifty trades below both 5-day simple and exponential. In addition, 10-day simple. So, 3 against and 9 in favor of. So, as a summary, just to buy, not the strong buy. Same for technical indicator summary as well, since some started to show overbought condition. In case of Bank Nifty, it too forms the same bullish harami and bullish hammer pattern. So, no different from Nifty. However, in case of moving average and technical indicator summary, unlike Nifty, it is indicating strong buy signal. Moving on, based on options change in open interest for Nifty, huge new put options is added at 18,100 and 18,000. So 18,100 can act as the immediate support and 18,000 will be the strong support for this expiry. Similarly, significant new call options were added at 80,400 to 80,450. So that region might act as the immediate resistance. Then from overall options open interest data, 18,200 got the huge short straddle, 18,500 got the nearby maximum call option open interest. Thus, 18,500 will be the resistance to break for this expiry. In case of Bank Nifty, from overall options open interest data, 44,000 got the huge short straddle, then 43,000 got the maximum nearby put option open interest, followed by 43,500. So 43,500 is the immediate support and 43,000 is the strong support for the expiry, whereas 44,500 is the resistance to break. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the algorithm and will also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I am doing it for my and viewers' educational purpose only. Thanks for watching.